Welcome to processtrading.com for day trading the S&P 500 E-mini futures with the inflection point trade system. It is a system of trading using four non-correlated, non-lagging indicators. And by non-correlated, I mean that each one is based off of different data. It's not just the same data presented to you in multiple different ways, many indicators reflecting the same data. This is entirely different. So let's go over and look at the trading screen. This is the trading screen, and I should mention right up top, this is the matrix. It's built for TradeStation, and this is the matrix in TradeStation. And the system uses a specific trade management technique where you buy into strength and sell into weakness. And we'll go over that in a separate video. That concept is basically keeps you in trend trades, but the system itself identifies highs and lows and turning points, so you can trade in the other direction, but in effect, it's still not a contrarian trade. It's still trading basically with the trend, which is probably what suits most traders. So this is the trading screen that has been most useful. This is a 750 tick bar chart here. This is the 1500 tick bar chart, and this is a 30-minute tick bar chart of the E-mini futures. So there's three time frames here, and I use this 30-minute time frame basically to give me an expectation of the trend. You basically could use this to say you don't want to trade against whatever color that bar is. So, and you can see that it has these different indicators here, and in particular, we're going to go over this indicator today, which is called the range indicator. And of course, this is a live screen, and I wanted to do it that way so that you can see the 1, 2, 3, and basically 4 indicators that identify what the market is doing and what the points are for the changes of direction, etc. But this, for whatever reason, when you do it live, this shows up as all gray bars. And so I talked to the developers about this, and they're looking into it. So, but as of now, then, what we'll do is we'll just do this video with screenshots, and then maybe later I can redo it using the regular live trading screens. So here's what we have again. We have two different oscillators. One, we have the range oscillator down here that calculates highs and lows and pullbacks. This midline, the high is the cyan, and then there's a magenta line is the bottom. And this midline here, that's really a pullback line, and it actually does identify pullbacks. You read these relative to each other. That's how they all work together. This is the inflection oscillator, which, let me see if I can get another screen that shows this better. This is the inflection oscillator, and it calculates precise probability points where price is going to turn. For instance, you can see right here this momentum line where it cuts down through the upper bound, and then it cuts through this dash line. This dash line is exceptionally important, and it is the it's the inflection line, basically. It is critical to be able to read this properly. But when the momentum line cuts the inflection line, that's an indication of a strong probability where price is going to change. Let's just review that real quick here. Here you see it crossing down and price coming down. Here you see it crossing up over it and price going up. Here you see it crossing down and price coming down. Here you see it crossing up and price going up. So that's how it identifies it, but you also identify it relative to the range indicator and relative to its position within the oscillator itself. So there's a lot to reading it, but it's very simple to read it at a glance. Once you get used to it, it's very simple. But this is the indicator that we really want to go over today, and it's called the Intergy indicator. Last time we went over this indicator up here, which you can find that indicator out on the website. It's a video under the tab indicators, and we explain basically what this is. This is a regression to the mean line or support and resistance line, and how to use it along with these timing alert dots. So that was the previous video, the first one, and then this will be the second one of the 5 main videos where we explain each one of these indicators. In particular, in this one, we don't need those other indicators because we're going to go over this. This is the one that we're interested in today, and we're going to go over the construction of it and the application of it with its specific signals and how it relates to the other indicators. So the first thing that we notice here is that it's comprised of 3 colors: green, red, and gray. Now the green measures the energy of positive price movement. The red then measures just the opposite, the energy of negative price movement. And the gray shows where price from that movement is weakening, is starting to weaken. So you can see that the indicator here has 2 underscores, like it has yellow underscores and it has red underscores. And these underscores, a yellow is a place of positive strength for price. So you see that right here, and you see a little positive strength here. It doesn't indicate a trend. I can show you the other things that do that in a little bit. And it has the red underscores that show a negative or a weakening sign of the energy of price, so that leads to selling. Intermittently, it has magenta dots above the green bars, and then it also has, let me see, it has cyan dots below the red bars. Now, these dots represent potential changes of strength in price. So you can see the magenta dot here would suggest that the possibility of a change of strength coming from the up move here, from that, and here's where it comes in, and here it goes down. This cyan bar, these cyan bars over here, then they're at the bottom of the red, and so they would represent a potential change of strength in that down move that was right here, and you can see then the price does change. Here's one here where it really just kind of consolidated. The buyers came in, they tested the sellers overwhelmed, they went out, and price continued down. Then you get over here, which again is a point of potential change of strength or energy in the selling that's going on, and you can see the price does went out over to this point here. Occasionally, there are yellow dots as well, and they represent a potential minor or major trend in any direction in the near future. And we can see that we had a yellow dot here, and in particular, this trended down. Now, there's other ways for us to also tell how it trends. For instance, it's cutting through the support resistance regression to the mean line here, and it goes below it. So anytime it cuts below it or above it, it has a definite chance of having an extended move to it. So these yellow dots can sometimes give you a heads up or a clue to when that extended movement may be coming, so that instead of just taking 1 point on a trade or something like that, you can grab 3 or 4 or 5. So that is the dots. Now, we want to understand the characteristics of the Intergy indicator here. And we see that what they do is they build in a pattern of upward and downward peaks. And these peaks reveal price cycles. In between we can see that here's a peak, it builds up, and there's the peak, and then it goes down. It goes down to a peak here, but it didn't turn up at the peak here. Here's another one. This was at this price going up, and then it reached a peak and it came down, and here it's coming down and it reaches a lower peak here, and then it turns up. If it's in a strong downtrend, a strong uptrend, these will be they can be very minor moves, so here's a peak here, here's a peak here, and on this peak you can see it did move up. This one it did not. So you don't use these necessarily as buy and sell signals, but they set up your expectation so that when you read all the other indicators together, they present a very true picture, and it sets up your trading expectations of how you're going to manage that trade as well. So these peaks from the upper green bars to the lower red bars, then they have a trough in between them, because you can see that the green changes color into gray, and when the bars turn gray, that shows that a weakness is coming in, and they come down. Let me see if I have one here. Yeah, in an uptrend, when you're in an uptrend, these peaks receding into a trough here will often just represent a pullback point. So we see that it reached a peak, it's coming down in a trough. It actually looks like, well, this could go down further, but here we have a change dot, and here we have a yellow underscore, matter of strength. So we kind of know that this area is a pullback area. Now, again, you're just reading this indicator in conjunction with the other indicators, because the inflection indicator is actually the main one. This provides more evidence that your analysis is right. It tells another part of the story, so it gives you confidence in your trade. And we can see here, this green reach a peak, it pulls back, okay, and you could, even in a stronger uptrend, it won't even go below the zero line. It'll just pull back to a small gray bar, and that'll identify a potential pullback area, kind of like here. Now these are fairly weak peaks that are coming in down here, and so the pullback is not a gray bar, but it's within the red. Here's a more typical example, so that you have the green energy of price movement coming up. Then you have a magenta dot that tells you weakness is coming in. You have the gray bars. You have the red underscore. They both indicate weakness there. And then it does start its normal thing where it's a peak, and then it slides down the other side. And then right here, well, these are a little red bars, but in general, if they were just small gray bars, then that identifies a pullback. That's in an uptrend. Of course, the opposite is just true within a downtrend. The gray bars, let me see if I can find one of these in here. These gray bars, the way that you read them within the red bars is a little bit differently, because the gray bars primarily show up above the zero line. When they show up within the weakness of selling here, and you get a gray bar here, well, that gray bar actually, when it's in the red, it can reveal a larger impending move in the opposite direction in the near future. So this is more of a leading type of indicator. It's not non-lagging. It's more a leading type, because this is not the time it's going to happen. It's just telling you that the selling is getting weaker here, and the selling is getting weaker here. And finally, we see over here it gets a cyan dot. It did exhaust itself, and now from that lower peak it starts up, and that's when that move comes in. And these dots sometimes suggest either a minor or major trend change. So that's a fairly minor trend change of let's see how many, maybe 10 points or something like that. So that's another way of interpreting it. Now I want to show you something else here. Let me see if I can find it. That's the trouble with using screenshots. Do I have it? Well, we could use this one. I wanted to show you that you could also use this Intergy indicator for divergences. You can see that this is a high peak here. It's going lower. And you can see the green is getting lower. So it's going down and down and down while price is going up. So you can also use it with the divergences, and obviously that ends with the reversal in the opposite direction. So these are various aspects of using the Intergy indicator. Next time we'll be going over the inflection indicator, which is really just a critical indicator. And again, it's very simple to read, just as this is very simple to read, but it has significant precision to it. So that's all for this video. Sorry I had to use screenshots, but like I say, the developers are working on that, and hopefully we'll get that straightened out in the near future. And I hope all your trading is great. See you in the next video.